an answer soon. Although we operate on different times, I'll attend the meetings, catch up on my reading, continue in my pursuit. Make something out of these blurry images of you. Blurry images. Blurry images of you.
Listen to me, oh my dear, it's been so many years, but I haven't shed a tear. I've been silent all these years, oh, all these years. Look at me and see me cry. I don't want to say goodbye. Left a million lies behind, and it echoes in your mind for all time. And if I live my life for you, dear, eternal light is here with the darkness over. 'Cause you are someone I have needed. I give you everything, but it's all I have to give. Listen to me, won't you? No one knows you like I do, and I wouldn't dream of losing you.
Good morning and happy FedNest Day to all those out there tuned in. We'll be covering the Federal Reserve interest rate decision press conference and then earnings from one of the Mag 7 that's reporting tonight. There's a vote out there on Twitter if you want to register your vote. Right now, Google or Alphabet is in the lead, but Meta and Microsoft are also worthy contenders, so register your opinion there. I think it's going to be an interesting day. I don't expect a whole lot of fireworks. The Fed is likely to come out, cut by 25 bips, surprising pretty much no one anywhere. But they'll likely express some concern and caution regarding the lack of data, the visibility they have, and how that may change their thoughts on future cuts if that data doesn't come online soon from the government shutdown, which I think it will. I think we're very likely in the final inning of the government shutdown because the stakes are so high for both sides. On the right, you've got the inability for the USDA to bail out farmers. On the left, you've got SNAP benefits running out for a lot of people. I think this is going to motivate some kind of reconciliation that allows there to be a continuing resolution sooner than later, which I'm sure the market will see as a positive, although it really didn't react negatively to the shutdown. And on screen, we've got Bookmap running with my SPX options visualizer. You can see the key levels that are displayed on the rightmost column. This is within Bookmap, showing us the liquidity heat map. I've also enabled the absorption and exhaustion indicators, and I'm just going to do a little bit of fine tuning on some of the other add-ons I have as well. Just give me a sec. Now, we do have audio alerts set up when there are events that warrant that kind of alert, whether it's an absorption or exhaustion event, a large stop run, or an iceberg that's of size that warrants attention. All those are set up for now.
taste of sweet surrender. You know you're no pretender. All the things you try turn to dust and die. Why won't the darkness go away? Can you see a time when the night will fade away? Will you be here for the dawning of a new day? Whisper once I'll breathe your every breath. Whisper twice I'll die.
You can see as price falls, there is a party out there buying, passively buying into that weakness. We saw a 1,000-lot iceberg just about 11:43 a.m. and that was into a little bit of selling pressure. So it
Large
seems like, at
sell
least for
iceberg
now,
ESC5 CME at 69.35.
and now we have some sellers doing some passive orders overhead, and you could hear that come over the stream as well. So you'll get those alerts. Those are set up to see the buy side and sell side icebergs of size, absorption, and exhaustion events. Those will also be announced, as will real-time news. That's coming over from Financial Juice. And then, of course, you've got the visualizer that updates the SPX options flow just about every minute, recalculating those levels and those flows. So pretty cool little setup we've got here. This is modeled after what we have at Traderade on our Discord running whenever markets are open. So it gives you a taste as to what we can offer our members as one of the many tools that can be used to sharpen your edge. Or if you run Bookmap or MotiveWave on your own, you can also plug the SPX options visualizer into your setup. Just visit traderade.com/SPX to learn more.
Can you see a time when the night fades away? Will you still be here for
Large buy iceberg ESC5 CME at 6,933.5. Large sell iceberg ESC5 CME at 6,933.75.
whisper twice I'll die your every death. Touch my lips, I'll silence your goodbyes. Trust is in the color of my
And I'll be standing by to provide commentary on events that happen, including the Fed decision and the press conference, and then we'll shift over to earnings as we get to the after-hours session in the market. But for now, we've got about 2 hours before the Fed, so probably going to see some consolidation, maybe some just-in-time hedging flows ahead of that event. Certainly that is motivating some of that put buying we're seeing on the lower end, where we see the hot put and warm put transacting. That's the most active and second most active strikes on SPX.
Quero deitar no seu colo e ouvir a sua voz que cura de toda a solidão de quem procura o bem de todos. E quando meu ouvido já não ouvir, e meus olhos já não verem, e meu corpo já não sentir, o meu espírito ainda vai lembrar de como era bela a sua voz.
Large cell stop run in ESC 5932.03.
No seu colo e ouvir a sua canção que cura de toda a solidão dos que procuram bem de todos. E quando meu ouvido já não ouvir, e meus olhos já não verem, e meu corpo já não
Large by iceberg ESC 5 CME at 6930.75.
de como era bela a sua
Large cell iceberg ESC 5 CME at 6931.
Nunca se esqueça, oh meu bem, toda a felicidade do mundo cabe no colo de alguém. Nunca se esqueça, oh meu bem, toda a felicidade do mundo cabe no colo de alguém.
We are starting to test our vol trigger level here. If we do pull below that, that is likely to introduce some more back and forth extremes, I would say. We are starting to also see a larger offer overhead, 615 just at about 69.38 and 214 on the bid at 69.25. So near spot price liquidity is starting to build up. You see some of the larger players coming in with those offers and bids as the market starts to slide a little bit more on some better levels of seller aggression. You can see that with these delta bubble prints getting larger, as well as the subchart delta volume bars showing that aggression.
Can't you see the sunshine is disguising what's going on between me and you? Why can't we learn to let it be? And why is it so damn hard to just love easily? And why do we always lose when push comes to shove? Why can't we just let love be love? We work so hard at keeping it together, analyzing everything we feel, but we keep on attracting stormy weather, lightning strikes
Next number's called Forget About Me.
Travel the world from sea to sea, but it takes more than travel to forget about me. And everywhere you look, from the billboards to the TV screen, you will see my name in lights bright, a shining set. Forget our times if you want, but you can't forget my face. And you can't forget why you up and left this place. I bet you can. Forget about me, I bet you can. Forget about me, or you can travel the world from Bangkok to Calgary, but it takes more than a plane to forget about me.
Honda says production cuts are due to a chip shortage in North American plants.
Hope your coffee tastes a little different in the morning. 'Cause it don't give you the same kick that gets you going. And every cafe and diner there you step foot in, I hope it reminds you of everything that we could have been. And I ain't fair, baby, really, I wish you well. And I'm the best in story you never tell. I bet you can. I bet you can. Forget about me, and you can travel the world from Bangkok to Calgary, but it takes more than a plane to forget about me. I said, I bet you can. Forget about me, I bet you can. Forget about me, I bet you can. Na 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 na, I bet you can. Na 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 na, or you can travel the world from Bangkok to Calgary, but it takes more than a plane to forget about me.
Thank you.
No amor, no andor, no verde eu vou, flautins e ambos cajás, entre araras, roxinóis, regatos a navegar. No amor depressa pra avistar o sabiá que veio te ver passar. Ai, quanta beleza contemplar, amar e amar, explosões de sons pelo ar, trilhando a cor em versos, vou cartear e saltar, passarada cantar. De flor em flor com estrelas vou iluminar e banhar, docemente transportar, em lendas te enfeitiçar. Cunhã eu sou, fluindo vou te consagrar, com essa luz despertar. Volta bem depressa pra avistar o sabiá que veio te ver passar. Ai, quanta beleza contemplar, amar e amar, explosões de sons pelo ar, de tanto amor inverte eu vou me agregar, o sagrado exaltar.
Working for Zeus on the weekend, with all the eagles and the lightning. As I was standing on the corner, Jupiter shining over water. There was a whisper in the waves, there was a silence in the mist. I thought that I could hear a distant bellow, so I went drinking with Apollo. And in Athena's mirrored shades, I could see out across the bay. In the sky, eagles were crying all around a boat of mirrors, all around a boat of mirrors, all around a boat of mirrors, all around a boat of mirrors. pushing up feathers in the morning. Thunder resounding in my ears. I saw the leaves blown from the old oak tree. Clouds are gathering to bring justice. Clouds are gathering to bring justice.
Golden sun melts in the sky. Children's laughter echoes high. Colors scatter, dreams alight. India dancing in the night. Old bazaars and crowded lanes. Rhythms play in gentle rains. Spices warm the morning air. Every heartbeat everywhere. Golden sunsets, hear the call. Hold my hand, we'll have it all. Songs of love beneath the stars. India, you're never far. Kites that soar above the streets. Music flows through every beat. Voices sing in harmony. India sets our spirits free. Gentle breeze through ancient trees. Memories in each soft breeze. Stories told in every grain. India's magic will remain. Golden sunsets, hear the call. comfort will remain. The way you just showed up right now, I'm glad that you came around. The last gentleman in this town. I'm glad I have finally found you. You're my sunshine, you're my perfect ground. You're the moment I keep repeating in my mind. You're my rock star, you're my go-to bar. You're the song I keep playing in my car. The way you just showed up, the way you just showed up right now. I'm glad that you came around. The last gentleman in this town. Look who I have finally found. You. Did I finally find you? Did I finally find you? Did I finally find you?
At times I hear the click of your knitting in the tick of the clock in the hall. I hope you'll read this note, 'cause I'm worried that you won't ever answer my call. I need this message to get through. Charlene, I'm still here for you. I bet your fingers itch to cast on and stitch all your worries away. I thought this green might be almost perfect for a tree where to run a dance play. It made me smile and think of you. Charlene, I'm still here. I'll always be here for you. I saw your friend, that girl called Sky. She misses you, and so do I. And that teacher you liked, she's permanent now. She said to let you know, she says hello. The greenhouse tomatoes were turning red that day in the garden when you said, in foster care you come and go, you never see anything grow, and you wish you could watch something bloom. So we planted some flowers next to the shed. I told you they'd soon be as high as your head. They grew so tall, so fast, the shadows that they cast reach into your room. Charlene, I know it might feel hard to trust and rise from the dust when the world's brought you low, but if you'd like to see me, if social services agree, let's start something new. Knit two together, me and you. Charlene, I'll be here. You can count on me. I'm still here for you.
Déjame
find the strength to leave it behind. I'll be the light that guides your way, the hands that hold your fears at bay.
Large by iceberg ESC 5 CME at 6,939.5.
I'll take the burden, let it rest on me. Every pain, every word, set it free. You've carried enough, now it's my turn to hold the fire while your heart can burn. I'll take the burden, let it rest on me. Every pain, every worry, set it free. You've carried enough, now it's my turn to hold the fire while your heart can burn. Your tired eyes tell stories you can't say, but I'll read every page and take it away. Lean on me when the world's too cold. Together we'll make the broken whole. No mountain too high, no river too wide. With love as my armor, I'll stand by your side. You've given me more than words can define. Now it's my time to give you peace of mind. I'll take the burden, let it rest on me. Every pain, every worry, set it free. You've carried enough, now it's my turn to hold the fire while your heart can burn. I'll take the burden, let it rest on me. Every pain, every worry, set it free. You've carried enough, now it's my turn to hold the fire while your heart can burn. So rest, my love, in my embrace. You're safe now, I'll take your place. Through every storm, through every tear, I'll carry your weight forever, my dear. So rest, my love, in my embrace. You're safe now, I'll take your place. Through every storm, through every tear, I'll carry your weight forever, my dear. Good night to the whippoorwill. Good night to the lark. Good night to the big moonshine and all the fireflies in the park. Good night to the dusty trail. Good night to the town. Good night to the green grass that grows in the ground. Good night. Good night.
city. Good night to the stars in the sky and to my sweet baby. Good night to the foxes. Good night to the bees. Good night to the owl's call that echoes in the tree. Good night. Good night. Good night. Good Les champs verts sous le vent, ciel nuageux tout le temps, les falaises sur l'océan, je me souviens de ces moments. Le parfum du cidre frais, les pommes tombées des forêts, les bateaux dans le port discret, c'est la vie en Haute-Normandie. Haute-Normandie, toi et moi, dans tes bras, je me noie, les vagues chantent notre joie. Haute-Normandie, toi et moi, les villages tranquilles et doux, les souvenirs de notre rendez-vous. Les rues étroites, on marchait au son du clocher du passé. Les marées basses, les marées hautes, les secrets que la mer emporte, le phare qui guide les marins, nous marchions main dans la main. Haute-Normandie, toi et moi, dans tes bras, je me noie, les vagues chantent notre joie. Haute-Normandie, toi et moi. Les villages tranquilles et doux, les souvenirs de notre rendez-vous. Les rues étroites, on marchait au son du clocher du passé. Les marées basses, les marées hautes, les secrets que la mer emporte, le phare qui guide les marins, nous marchions main dans la main. Haute-Normandie, toi et moi, dans tes bras, je me noie, les vagues chantent notre joie. Haute-Normandie, toi et moi.
Elle court, la maladie d'amour dans le cœur des enfants de 7 à 77 ans. Elle chante la rivière insolente qui unit dans son lit les cheveux blonds, les cheveux gris. Elle fait chanter les hommes et s'agrandir le monde. Elle fait parfois souffrir tout le long d'une vie. Elle fait pleurer les femmes, elle fait crier dans l'ombre, mais le plus douloureux, c'est quand on en guérit. Elle court, la maladie d'amour dans le cœur des enfants de 7 à 77 ans. Elle chante la rivière insolente qui unit dans son lit les cheveux blonds, les cheveux gris. Elle surprend l'écolière sur le banc d'une classe par le charme innocent d'un professeur d'anglais. Elle foudroie dans la rue cet inconnu qui passe et qui n'oubliera plus ce parfum qui volait. Elle court, la maladie d'amour dans le cœur des enfants de 7 à 77 ans. Elle chante la rivière insolente qui unit dans son lit les cheveux blonds, les cheveux gris. Elle court, la maladie d'amour dans le cœur des enfants de 7 à 77 ans. Elle chante la rivière insolente qui unit dans son lit les cheveux blonds, les cheveux gris.
This is the third take.
Wait a second, I'm looking something up. Oh, fuck it.
Break my heart, 'cause I want to feel the start of something that will rid this apathy. And I don't mind if it's tough, 'cause my heart has had enough encounters to know what's up when you talk to me. But I miss those times in my room when you sat on my bed and talked about the things you said that week, and you gave me an update on your history. And I wonder if you feel the same. Do you browse and look back on old Facebook chats we were keeping? Remember the friends that we used to be? 'Cause now we're strangers. Ever since you left for that new city, feel like strangers. Occasionally check your social media feed, feel like strangers. Or at least not like what we used to be, feel like strangers. And I'm sorry if I was too shallow to see. Changed my
Just zooming out of here just for a second to show we have interest in calls building at some of these higher strikes. So there's some potential that if we get a more dovish Fed statement and press conference from Powell, that we could make a pretty big move higher. So looking at that hot call and warm call, that implies that we could have somewhere between a 40 to 60 point move higher from current prices. Again, if there's a more bullish scenario that unfolds from the Fed. For now, I'll keep the warm call on screen just so we can see how that evolves. But it does look like we have a sort of two-sided market. Whereas if the Fed's kind of status quo, doesn't really surprise anyone, probably creates some turbulence, but ultimately not a terribly large amount of movement. However, if we do see a Fed that comes out more dovish, I think we've got room higher to ES 6980 to 7,000. And remember, we've seen a lot of SPX options activity at 7,000 as well. It's about 32, 33 points away from ES. But that's still another area to watch. Really, a lot of the larger trading desks are looking for SPX 7000. I started talking about that in early August because we saw the flow and positioning starting to build there. And it does seem like it's almost inevitable that we just climb into that area and probably get stuck there, maybe even have a small rejection. But I think SPX 7000 is a reasonable target to see this quarter.
Drown me in your rain. My desire carries no shame. My will harbor no pain. Wash me clean. Mend my wounded seas. Cleanse my tarnished dreams. Swim
bent genadig en zo'n goede vader. Laat heel mijn leven getuigen van wie u bent. En het wonder van genade dat u schenkt. Laat heel mijn leven getuigen van wie u bent. U bent genadig en zo'n goede vader. U bent genadig en zo'n goede vader. Leer me met open armen in het leven staan. Met liefde die waarheid spreekt en leugens laat vergaan. Laat ze in mijn ogen zien hoe u kijkt. Zelfs in een glimlach, Heer, dat uw liefde nooit wijkt. Leer me met open armen in het leven staan. Met liefde die waarheid spreekt en leugens laat vergaan. Laat ze in mijn ogen zien hoe u kijkt. Zelfs in een glimlach, Heer, dat uw liefde nooit wijkt. Zelfs in een glimlach, Heer, dat uw liefde nooit wijkt. De første jeg ser at vinteren er her. En melodi af sne. Vinteren skønhed jeg kan se. Stilhed og fred. Sneen dækker søens bred. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner. 'Stjerner på jorden'. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner. 'Stjerner på jorden'. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I det stille skær. Verden dækket ved af kar. Iskrystaller glimter som stjerner på jorden. I líquidos sabem ouvir silêncios. São cera que percorre as cordas dos violinos. Derramam seu opus sobre as águas turvas. Amores líquidos desafiam a secura que perece os corpos. Não temem a chuva que alastra em ondas de tantos capítulos. Amores líquidos, donos da própria vontade, fluem mares indômitos na corrente da liberdade. Emergem à superfície pra beber poesia. Amores líquidos, banhados nas mágoas, onde se juntam as águas, onde não há calmaria. Amores líquidos, banhados nas mágoas, onde se juntam as águas, onde não há calmaria. Amores líquidos, banhados nas mágoas, onde se juntam as águas, onde não há calmaria.
Ante el trono de Dios estoy.
Surely expecting the result of the Fed reverse repo operation.
Ante su majestad y santidad, adorando, adorando al Rey. Entrego mi canto y mi corazón, levanto mis manos y mi amor, levanto mi voz para adorarle al Rey. Entrego mi canto y mi corazón, levanto mis manos y mi amor, levanto mi voz para adorarle. Tú eres Dios, tú eres Rey, sentado en majestad y autoridad. Tú eres Dios, tú eres
15 counterparties take 19.504 billion at the Fed reverse repo operation.
y santidad. Ante el trono de Dios estoy, adorando, adorando ante su majestad y santidad, adorando,
Large by iceberg ESC 5 CME at 6940.25.
You are my light in the dark, a delicate flower so tender and kind. With you there is no holding back, I feel it on my beating heart. I just wanna make sure you hear the words from me. Although life is a blur, here is a promise I can keep. I'll always stay true to you. I'll always stay true to you. If there were one thing left for me to prove, I wouldn't hesitate to choose. I'll stay true to you. Everything falls out of place, and your good intentions seem to go wrong. I won't turn my back on you, I'll hold you for the rest of my days. I just wanna confess, so you hear the words from me. Although life is a mess, here is a promise I can keep. I'll always stay true to you. I'll always stay true to you. If there were one thing left for me to prove, I wouldn't hesitate to choose. I'll stay true to you.
The heavens declare the glory of God. Day after day pours out its speech like whispers carried on the breeze. Night after night reveals its truth in stars that dance eternally. The heavens declare the glory of God. The heavens declare the glory of God. The skies above proclaim His art. The heavens declare the glory of God. His handiwork.
Sources say Germany examines option of nationalising Rosneft's local business in a backup plan.
Sweeter than honey from the comb, more precious than the finest gold. Your words, O Lord, they cleanse my soul. Your truth and wisdom, they unfold. The heavens declare the glory of God. every thought within my heart be pleasing to you, oh my rock, my great redeemer, that's who you are. The heavens declare the glory of God, your glory, oh God.
Here I am, Isolation Row. Isolation Row. I was feeling good, the world felt good today. A smile so wide for everyone who passed my way. When I got home, all I had was gone. I didn't see a red light, it came right out of the blue. A shot in the dark, what could I do? When I got home, all I had was gone. Here I am, Isolation Row.
Large sell stop run in ESC5 CME 6934.99. Large sell iceberg ESC5 CME at 69.35.
Pictures in my mind of times that used to be, colors so vivid, laughing and shouting at me. It's a lonely place to see, lonely place to be.
ghost or dead end, someone to mess around with. I don't understand. I loved you deeply, but just not in the way you wanted more. I'll miss you, but I'll let go, 'cause you're not the person that I thought you were. I'm sorry you've been hurt before, but all I wanted was to be your friend. Seems like that wasn't enough. Sorry, I'm not the one.
There's a beautiful home in the regions above that the Savior has gone to prepare. Thank God there's a way by His grace and His love to the beautiful golden somewhere. Beautiful home, beautiful home. Oh, how I long to be there. I shall find peace and rest with the pure and the blessed in the beautiful golden somewhere. To that beautiful land that seems far away, many loved ones and
Fed decision coming up in just under a half hour. I expect Powell to cut by 25 bips. Discuss risks and the visibility of data, but still claim that he has conviction that inflation is on the right trajectory to get down to 2% core PCE, although we do seem to be stuck just under 3%. The last reading that we had for August core PCE was 2.91%. I think Powell will show that he's more concerned about the labor market than inflation, that that's where he feels that the risks lie and that the committee agrees. So I feel like he's going to come out and kind of try to be dovish, but not overly dovish. That is to say, he's going to show some concern about inflation, though he'll say he's confident it's on the right trajectory. He'll have some concern about the opacity of where the economy is, given that data hasn't been released. Like, we just got September's CPI report last week. So there's this big delay. But ultimately, I think he'll cut by 25 and signal he's ready to cut again this year, probably by another 25 in December, where we get our next SEP report. He'll probably also caution that he really would like to see data resume to be more confident about making that decision. Now, we can have a completely different debate as to whether it's appropriate or not to be cutting. I think that the Fed started cutting well too early last year. I think it's a mistake to continue cutting in the here and now. And I think the reason for that is we still have a relatively resilient labor market in the aggregates of data that we're seeing, in the unemployment rate, in jobless claims, in JOLTS data, and otherwise. And we have inflation that is still somewhat sticky, just around 3%. We have asset prices that are at or near all-time highs, whether you look at stocks, housing, crypto, gold, or otherwise. And you also have some potential that commodities could continue this run that has been starting, particularly in some of the metals, if we have a lower cost of capital. On the other side of it, however, what we think the Fed should do and what they ultimately do are two completely different things. So even if we disagree with what the Fed does, we need to trade and invest in the market that is in front of us and in the economy that we exist in. So with all that being said, I may not be a big fan of what the Fed is doing, but I recognize that it is going to have impacts that benefit some of the components in the market that are more indebted, particularly those that are using revolving lines of credit. You could take, for example, components of the Russell 2000. These are small cap companies. They're not able to issue credit at reasonable rates, so they have to take out revolvers from banks and other lending institutions like private credit. In doing so, they're at the mercy of the prevailing interest rates, which means that as rates come down, the pressure on these companies also drops. That's not to make an investment thesis in the Russell, but it can explain why it's finally starting to come out of the doldrums and perform again, because their cost of capital is coming down. This is not the same for, say, the Mag 7. They're able to refinance their debts at very low rates. They're earning money on the cash that they have parked in money markets. So to some degree, it'll be less advantageous for them directly on their balance sheet, but it should help their customers, some of whom are in the Russell 2000, be able to continue to engage their services because, again, the cost of capital, the cost of credit is likely to continue coming down. So that's something that I think we have to take into consideration. I also think a Fed cut here in this environment is bullish for gold. To a lesser extent, it's bullish for silver because you're reducing the competition for precious metals. Precious metals are yield-free assets. They are typically accumulated during times of uncertainty. And I think that this is an area where they start to become more attractive. I'm still looking for gold to correct down to the 20-week moving average, which means we could still have a couple $100 to the downside. But ultimately, I think the Fed coming into this renewed cutting cycle only improves the odds of gold hitting $5,000 or more next year. And silver getting to $72 an ounce is also becoming more likely, especially if China starts to stimulate. China is the world's second largest industrial user of silver next to the United States. So the fate of these two economies has a big impact on that white metal. And for folks out there that are looking to trade Fed Day or tonight's earnings, might I just encourage some caution. What happens during these events is liquidity dries up, spreads widen, there's much more room for slippage. Your execution, even if you're trading the way that you think you should be trading, you may not get the execution you want because of how the market's moving and because of how illiquid things can become. So please, for the sake of your own consistency and continuity as a trader, be careful trading big event volatility catalysts like the Fed and earnings unless you know exactly what you're doing.
JP Morgan's Michelle, ahead of the FOMC, says we expect the Fed to cut 25 basis points and end quantitative tightening, saying the Fed believes this is a risk management exercise. Don't believe we will see descents to the hawkish side.
I've been walking through the silence, lost in echoes of the past. Every dream felt out of reach. Every night felt like a trap, but even in the quiet pain, something whispers, calls my name. There's a light in the dark, a fire still burning in my heart. Even when I feel alone, hope is leading me back home. Every tear becomes a lesson, every scar a part of me. Through the storm I've come to see I'm stronger than I used to be. Let the night fade away, even when I feel alone. Hope is leading me back home. Oh, Leroy Jenkins, brave and true, with your axe held high through skies so blue. You sailed the seas and you walked the land. In search of your love, you made your stand. Love could not part us, no death could divide. Through blood and sorrow we stand side by side. In the darkest hour, with hearts torn apart, you gave your all, Leroy, for love from the start. By the firelight, eldest's name you cried. Through forests deep and mountains high, two hearts entwined. Though fate was cruel, you fought for her soul, you broke every rule. Love could not part us, no death could divide. Through blood and sorrow we stand side by side. In the darkest hour, with hearts torn apart, you gave your all, Leroy, for love from the start. The sea that kissed the shores we know carried your bodies where soft winds blow. In a boat of flames you both sailed free, a love eternal as vast as the sea. Love could not part us, no death could divide. Through blood and sorrow we stand side by side. In the darkest hour, with hearts torn apart, you gave your all, Leroy, for love from the start. And now in the town where the waves kiss the shore, we remember you both forevermore. A statue stands proud for all to see, Leroy and Eldith together in eternity. Love could not part us, no death could divide. Through blood and sorrow we stand side by side. In the darkest hour, with hearts torn apart, you gave your all, Leroy, for love from the start. And now in the town where the waves can
Sunrise over a pixel sky, pickaxe ready, watch the time fly. Grass underfoot, dreams in
G7 to announce Critical Minerals Production Alliance on Friday.
Step outside, the world's brand new. Cut some wood, the skies turn blue. Mountains high and caves below, everywhere's a place to go. Oh. Torch in hand when night comes fast. Creepers hiss, gotta move, gotta last. Diamonds deep where shadows crawl. Risk it all or lose it all. Block by block, I'm shaping the world with every breath.
So in 15 minutes time now, at the top of the hour, we see the release of the US interest rate decision as well as the rate statement. For the rate decision, general consensus is for a 25 basis point cut down to 4%. Ahead of the FOMC meeting this month then, a note from ING who say that the US September inflation was softer than expected, rising spot 3% on the month and 3% on the year for headline, and spot 2% and 3% on the month and the year for core relatively. They say the consensus forecast was for a spot 4% month-over-month headline print and a spot 3% month-over-month core. As such, ING see this as a green light for a 25 basis point Fed rate cut at this meeting, even though the core month-on-month rate continues to track above the 0.17% month-over-month rate that we need to average in order to bring the annual rate of inflation back down to 2%.
Sunrise over a pixel sky, and I'm still here. One more try. Baby, I'm a man of many faces. In my mind, a million places. Day to night, it's a chase. Living in the in-between spaces. A silhouette of a smile, masked by a frown. Two different beats, trying to find the song. I'm two halves of the same, innocence and the wounded game. The boy who laughs, the man who bleeds. Whichever I've been, I'm always gonna remain unseen. I'm an eclipse, the high and the fall. Common chaos, all rolled into one. Day to night, it's a chase. I'm the lullaby, all the vivid scream. A silhouette of a smile, masked by a frown. Two different beats, trying to find the song. I'm two halves of the same, innocence and the wounded game. The boy who laughs, the man who bleeds. Whichever I've been, I'm always gonna remain unseen. Tell me what you see when you look at me, a joker or a king. Oh, I don't know, remains to be seen. A silhouette of a smile, masked by a frown. Two different beats, trying to find the song. I'm two halves of the same, innocence and the wounded game. The boy who laughs, the man who bleeds. Whichever I've been, I'm always gonna remain
So in 10 minutes time now, at the top of the hour, we get the US interest rate decision, where the general consensus expects another 25 basis point cut to 4%. With this, we also get the FOMC rate statement. So some commentary from Bank of America ahead of the rate decision today. They say the Fed is expected to cut rates by 25 basis points and end balance sheet runoff at its October meeting. They say policymakers will likely acknowledge the recent economic resilience, but keep their focus on supporting the labour market. With limited official data due to the government shutdown and ongoing uncertainty around the employment trends, Powell is unlikely to give forward guidance beyond this meeting, reinforcing a cautious fly-by-instruments approach. So we're now 5 minutes away from the top of the hour, where we get the headline event for today, the US interest rate decision, where the general consensus from the markets and analysts expect a 25 basis point cut to 4%. We also, with this, get the FOMC rate statement. So one last note ahead of the Fed rate decision today then from Credit Agricole. They say the upcoming September FOMC meeting will draw significant attention, particularly due to the lack of key economic data during the ongoing government shutdown. Reports such as PCE, GDP and employment costs will be delayed, leaving only limited releases like consumer confidence and regional Fed surveys. The Fed is expected, though, to deliver another 25 basis point rate cut at this meeting, keeping its guidance open-ended amid uncertainty and internal divergence on the policy outlook. Policymakers are likely to reiterate that rates are not on a preset course and that no risk-free path exists for monetary policy. Analysts argue that market expectations for rate cuts remain too aggressive, as the Fed will likely pause easing once inflation concerns reassert themselves later this year. Attention will turn to the Fed's balance sheet policy, with Fed Chair Powell hinting that quantitative tightening could end in the coming months. While a formal announcement may not come in October, recent money market pressures and increased use of repo facility suggest that quantitative tightening's end is near, possibly by December, after Powell lays the groundwork at the next meeting.
How sad was I as you walked by? My heart stood still. I don't know why I waited there. Just one more word, hoping your voice was the one I heard. You didn't see the tears I held. You didn't feel the love I felt. You grabbed my heart.
This is a preview file. 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 This is a preview file.
You can see liquidity beginning to diminish ahead of the event volatility catalyst that is the Federal Reserve decision expected in less than 2 minutes here. And you see that on the heat map. This is an area where you want to be very careful with how you manage your positions and risk, because you can get exaggerated moves without market makers there to buffer that offer and bid dynamic.
I'll lead with the US interest rate decision.
This is a preview file. This is a preview file.
Large sell iceberg ESC 5 CME at 69.35.
This is a preview file. This is a preview.
10 seconds.
This is a preview file.
cut, 25 basis points cut, 25 basis point cut to
Large
4%
buy stop run
as
in
expected.
ESC5 meet
The Fed says Myron dissented in favor of a
6,938.91.
half-point cut once again. Says the Fed say they will stop shrinking the balance sheet on December the 1st. So again, Fed saying they will stop shrinking the balance sheet on December the 1st. Fed Schmid also dissented in favor of no rate change.
Large buy stop run in ESC5 meet
The Fed
6,944.02.
Policy Committee is attentive to risks on both sides of the dual mandate and judges downside risks to employment have risen. Inflation has moved up since earlier in the year and remains somewhat elevated. Uncertainty about the economic outlook remains elevated. Fed votes in favor of policy was 10-2, with again Myron preferring a half-point cut and Schmid preferring no cut. To conclude aggregate balance sheet drawdown on December 1st. So Fed they're saying beginning December 1st, it will roll over all maturing Treasury principal payments. US short-term interest rate futures fall after the Fed decision as traders pair bets on further Fed rate cuts.
This is a preview file.
Large buy iceberg ESC5 CME at 6,937.75. Large buy iceberg ESC5 CME at 6,937.5.
This is a preview file. This is a preview file.
Treasuries extend drop after the Fed cuts rate with 2 dissents.
This is a preview file. This is a preview file. This is a preview file. This is a preview file.
So the Fed did what we all expected the Fed to do. They cut by 25 bips, and we had one dissenter, which wasn't too unexpected, but ultimately it doesn't mean a whole lot. We see some negative pressure in gold. We see a little bit of selling happening here in equities as the S&P touches the lower end of today's price range, excuse me. And we are in an area of potential support. So what that means is you really don't want to see price push below that vol trigger and build acceptance below there. That would open up the doors to some lower lows. Now let's zoom out a little bit on the flow. We can see the hot call strike has moved down a little bit. It was around 7,000 earlier. Now it's at 6,980 in ES terms. And there's a variance of about 1K volume between the two contracts, but it's really going to be all about the presser at this point. We could consolidate what we've seen so far because the statement was a non-event. The presser may bring a little bit more dynamism, but what I think is going to be the key event volatility catalyst tonight are the three earnings we're getting: Google, Meta, Microsoft. That's where there's potential for some more volatility, in my opinion. But we'll see what Powell has to say. He's coming up in just about 26 minutes, and we'll be carrying that live here as well as the price reaction. So stay tuned.
Aggressive absorption detected in S&P futures by sellers.
This is a preview file.
Voice news
Large
disconnected.
sells top run in ESC5 meet 6,928.72.
And so we are seeing a little bit of that pressure starting to test that vol trigger level. That's not really what you want to see, but it's also not entirely unexpected. Fed also coming out and saying beginning December 1st, we will reinvest all mortgage-backed securities principal payments into treasury bills. And they'll conclude the aggregate balance sheet drawdown on December 1st. And so on screen, what you can see here, that 130 green print was a bit of a buy-side iceberg just after the FOMC statement was released. Then we had a relatively large seller absorption of buyers, that 1,114. That's 1,114 contracts that sellers dumped onto buyers in that more aggressive buy-side volume. You can see that in that candle just before 2:05 p.m. And then finally, following that, 126 contracts stopped out, buyers stopped out there as we made that tiny little new low. I'm going to zoom in just a little bit more as we approach the press conference in just about 24 minutes. But I think that's, if there is going to be any dynamism in this tape, it's going to happen while Powell's speaking. It is often the case that it happens while Powell's speaking. So I think that, you know, status quo remains the name of the game here. It's still likely that we could get more chop, more volatility while Powell speaks. And it's really going to be about how a lot of the algorithms that parse his words in real time interpret that, and then how their handlers and ultimately how some of the actual human traders interpret those words as well. This is why FOMC volatility and the decision kind of takes a few days to parse, so you really don't have the full market reaction until close of Friday. Add to it the volatility catalyst of three major companies coming out tonight, Google, Meta, and Microsoft, and that really does tell us the market's going to have to digest all of this information. So the initial reactions that you see may not really be what ultimately is priced in. And I think that's a really important lesson that we have to learn every Fed meeting and every earnings cycle. Also, I will say, whoever it was that decided we're going to have Fed Nest Day on the same day that we have three of the biggest companies on earth reporting their earnings, that's a bit of a sadistic thing to do to us market participants. To me, it makes me more likely to want to sit on my hands, not really trade this tape, because there's just too many moving parts to reasonably keep track of. And you can see the price action today overall has not been that satisfying. Now, again, maybe we get a little bit more of that back and forth ping pong while Powell's speaking, and we get all of that information being parsed by the algos and human traders with a little bit more latency. I think that's where you see more dynamism in today's tape. And then after hours, it's going to be all about those earnings. And that could be pretty volatile, especially as we get to the Globex Open at 6 p.m. Eastern. So stay tuned. In just about 22 minutes, we'll be covering the FOMC press conference with Chair Powell live. My prediction is he wears a purple tie. He tries not to rock the boat too much and really focuses his concern on the lack of data and the labor market. He'll probably come off a bit more dovish, but how dovish he comes off is really going to be a determining factor as to whether we can tag that hot call or even higher than that warm call level. I think that's going to be the biggest moving part. If the market sees him coming out as dovish, that he's going to wind up the next, what is it now, 7 months he has at the Fed, really being more of a dove, then there's every reason for this thing to get bid into those higher strikes and make another all-time high close today. On the other hand, if he comes out a little bit more concerned, less decisive about the path of cutting from here without that data, you could see some more sideways chop. And if somehow, and this is the outlier in my view, if somehow he comes out as more hawkish, which I don't really see being likely, but if he does, then you could easily see that vol trigger broken and maybe that lower bid around 6,900 gets a fill on ES. But my view on this is that he comes out more status quo, leaning a bit dovish, not heavily, but a bit, and we get somewhat of a bid into that. I don't think it's going to be anything too aggressive, but we have to leave it to the man and what he says and how the market interprets that as to what trading setups may exist. Again, for me, on event volatility catalyst days like today, I'm not aggressively trading this tape, but I do think it sets us up on longer time frames for interesting levels to watch. You zoom out on some of these charts and you see the price action and volume profile built on Fed days. Those are often areas that the market comes back to and revisits for one reason or another, and those levels tend to be pretty important. So I think at the very least, even if we're not trading this tape, zooming out on the daily, weekly, and monthly charts is going to be important for what kind of price action and what kind of volume profile is built from this.
US 10 to 30-year swap spreads dropped to session lows after the Fed.
Large buy iceberg ESC 5 CME at 6,933.25.
So we're now 10 minutes away from the bottom of the hour, where we get the FOMC press conference with Chair Powell. We have got the live video on the feed for those interested.
Large buy iceberg ESC 5 CME at 6,930.25. Large sell iceberg ESC 5 CME at 6,929.5.
In 5 minutes time now, at the bottom of the hour, we get the FOMC press conference with Chair Powell. We have posted the live video to this on the feed. TE rose
8%
to
as
spot
well.
8%.
These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to
Large
face
sell stock
two-sided
run in
risks.
ESC5 meet
In the committee's discussions at this meeting, there were
6,925.97.
strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been
Pretty
to
big
stop
liquidation
balance sheet
here.
runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and it suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody.
Large sell stock run in ESC 5 meet 6,883.54.
A situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because, you know, again, the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Large buy iceberg ESC 5 CME at 68.95.
Thank you. Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, you know, that would certainly play into our decisions going forward. So, we do have, you know, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a
large sell iceberg ESC 5 CME at 6,889.75.
We'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market, and, you know, the fact that we're not
aggressive absorption detected in S&P futures by buyers
in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So, you know, we get like I mentioned, what we get in the labor area, we get some data in inflation, some data
aggressive
in
absorption
activity.
detected in S&P futures by sellers.
We'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, you know, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, you know, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had 2 dissents, one for 50 and one for no cut. So, you know, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, you know, they're noticing stronger economic activity. You know, forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, you know, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you know, you read the SEP, you read the speeches, you know there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance
large
sheet,
buy iceberg ESC 5 CME at 68.90.
The runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with, you know, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities. And we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding Treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Large buy stock run in ESC5 meet 6,907.6.
Report. So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So, okay, so the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation, but we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally, you know, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but
aggressive absorption detected in S&P futures by sellers.
Services, and we don't take a lot of signal about the tightness of the economy from
large
that.
buy stock run in ESC5 meet 6,915.08.
From tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, you know, 5 or 6 tenths, and so that, you know, if it's 2.8, then you know, core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further. But it is that it will be a one-time increase, and you know we've been very focused for
aggressive absorption detected in S&P futures by sellers,
and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, you know, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, you know, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Service inflation. Yeah. Well, again, the part of services inflation that is that isn't coming down as we would like it to is the non-market part of non-housing services. And you know, overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and I mean, financial services that are imputed rather than actually paid is a big part of that. But also just, you know, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market, is because, you know, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Large buy stop run in ESC 5 meet 6,918.57.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles. How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world, and big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. You know, there are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
You know, this is a temporary state of affairs, and you know we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it, and that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not I'm not committing to that. I'm just saying it's certainly a possibility that you would say, we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are, if you listen to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then? Well, the
Perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But
large by iceberg EST 5 CME at 6909.
So on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Large buy iceberg ESC 5 CME at 6,906.75.
With ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to 0. So maximum employment doesn't, on a sustainable basis, if you're creating 0 jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last 2 meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. So it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are 1/10 or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that, and has been growing, and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that, you know, where people need jobs, because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. You know, the economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course, that will reverse. But, you know, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. You know, it'll probably be argued both ways, right? But I've said a couple times here that, you know, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, you know, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you know, you slow down when you can't see as far ahead. Others may argue, I mean, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, you know. So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, you know, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But you know, I look forward to I know those discussions are really just getting going. They haven't come to the point where they're, you know, where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian. Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, you know, the unemployment insurance claims, initial claims, are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, I mean, in no story, you can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is the, you know, you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. and the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this. And I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under, quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
So, we're obviously, we watch these things very carefully, credit conditions very carefully. You're right. You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions, but we're going to be monitoring this quite carefully and making sure that is the case.
And then separately, many, you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep the economy buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop sharply unless there were quite a sharp drop in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume of an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption right now. And you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
Folks, that's the end of a rather spicy press conference from Chair Powell. Certainly deviated from what I had expected. We saw the left tail scenario I talked about earlier play out.
Aggressive
and then
absorption
some.
detected in S&P futures by sellers.
So this is something to be watchful of. That is that the Fed took the December rate cut as a certainty off the table. The market's now having to reprice what that means, and to an extent, it is a somewhat more hawkish Fed than what we would have reasonably expected today based on the statement, based on market expectations. Some of this seems to be Powell trying to preserve his legacy. Another component of it seems to be him pushing back against the government shutdown, which impairs his ability to look at the backward-looking data the Fed uses to make their interest rate decisions. Ultimately, I think this will end up being a blip unless we see signs that the Mag 3 tonight, Google, Meta, and Microsoft, have any kind of turbulence in their guidance. I think their earnings will be okay, but in their guidance, particularly as it concerns AI CapEx. It's important to note that AI CapEx has been the biggest contributor to U.S. GDP growth, and without it, we would have only grown about 0.1% in the first half of this year. So all of the market is really watching what's happening with AI, both the deals and the spending, as well as the promises of future spending. That's the bigger left tail coming into this earnings season, where we're sort of peak tech earnings this week. So that's what I'd be watching for. I will be covering Google earnings tonight, so stay tuned after the close. We'll be covering that live, both the announcement that comes over the wires as it crosses, as well as the price action that follows, and the conference call. But for now, I think we do have a Fed that is leaving the market to having to parse the tea leaves in a time where we're in a data vacuum as to what happens the end of this year. And remember, when the Fed's SEP report came out in September, their summary of economic projections, they weren't factoring for a lot of cuts going into 2026. So we may be closer to the end of this renewed cutting cycle. And what I mean by that is just look at Powell at his own words. If we are to take him at his word, he said that the Fed is in a pretty good place with rates, that there's a growing chorus feeling we should maybe wait a cycle, and they're now in the range of what many estimates are of their neutral rate. This is a big deal. Again, the Fed saying they're now closer to within the range of where they would see the neutral rate. What that means is there's not in their framework an impetus to continue cutting, particularly aggressively from here. And the market hadn't priced in an aggressive rate cutting cycle. It was really, maybe we get one or two more rate cuts this year, maybe one more next year. That was about it. Powell's taking that off the table and saying now it's uncertain, that there's risks to the policy in either direction. So that's what gave the market some indigestion. It does look a little heavy here into the close. You can see as we get to these higher levels, you have sellers absorbing buyers and basically trying to de-risk into strength. So that is also something that's worth watching. We haven't fully recovered from the swoon that we saw earlier to the lows, which took us down to where the hot put has now moved down to as well. So I would be looking potentially for some weakness into the close for one big reason. Not just digesting the Fed and what we've talked about, but also the potential for just-in-time hedging flow. That is to say, SPX put buying and individual stock put buying ahead of the earnings releases from Google, Meta, and Microsoft. There's every reason for market participants to want to hedge into that if they haven't already.
CME at 69.09.
So that's one of the things we'll be watching. Looking for that just-in-time hedging flow. I think that's one of the reasons that the hot put strike moved lower, that the vol trigger has moved lower. Now we're really watching that big bid, which is confluent with those two levels, the hot put and the vol trigger, at 68.80. That's just around the day's low. So what do you not want to see if you're bullish on this market? Short-term trading it. You don't want to see a push below there, an acceptance build. You particularly don't want to see us crush below that put wall. Those two levels are key support here. So what we're really watching for is whether they can hold into the close. And as I'm talking, we can see some passive icebergs coming through, bidding this as sellers start to get a little bit more aggressive. So there is on the other side of the tape a passive buyer that has, you can see even going back to about 3 p.m., there was an 1,000 lot passive buy. So there is both sides of this trade happening. There are passive sellers and buyers kind of keeping price contained to a more narrow range now that the press conference has wrapped up. But I do still think we have some potential for further weakness as the market digests the Fed taking that December rate cut off the table, saying it's no longer certain. Doesn't mean it's not going to happen, but he's saying it's no longer certain. Now, if you want to parse the tea leaves here, there's another hidden message in this. Powell really wants the government to reopen so he can get the data that gives him cover to cut in December. That's what maybe he didn't say directly, but you can read between the lines that he wants that cover. If he has that cover, he can cut, and if inflation comes back, he can say, well, the data told me to cut. But if he doesn't have that cover and he's flying blind, that makes it much harder. I do fully expect the government to reopen in November. I think that there's pressing motivation for both sides. For the Republicans, it's the farmers and really having to bail out the soy farmers, which they can't do with the government closed, the USDA closed. The Democrat side, it's healthcare, it's SNAP, it's other benefits. I feel like we're closer to a middle ground. So I do think we'll get some news in the next couple of weeks about the government shutdown ending. I also think we'll have some good news over the next couple of days with regards to U.S.-China trade relations. I do think there'll be some reconciliation there. So there are some positive catalysts to keep an eye on, but just in the here and now, what's most important is digesting what Powell said and looking forward to the earnings releases from Google, Meta, and Microsoft this evening. So I'll be back soon with some more commentary. If you have any questions, let me know in the stream chats. And overall, pretty spicy meeting from Powell.
Large buy stop run in ESC5 meet 6912.79.
Aggressive absorption detected in S&P futures by sellers. Large buy iceberg ESC 5 CME at 69.18.
Coming up just after the bell, Google earnings. And I posted the expectations out there on the feed for everyone, as well as the options implied moves and some of the key levels to watch. On screen here we have Google with the bookmap heat map, also showing the options visualizer for it so that you're able to see some of the key levels of options positioning. This is also what I showed on the feed with the graphic.
Large buy stop run in ESC 5 CME 6938.75. Large buy stop run in ESC 5 CME 6940.73.
Early release of Alphabet's earnings. EPS a beat, $2.87, an estimate of $2.26. Revenue a beat at $102.35 billion on estimates of $99.85 billion. So beats on headline EPS and revenue. CapEx a beat, $23.95 billion, an estimate of $22.38 billion. Revenue ex TAC, $87.47 billion, which is a beat on estimate of $85.11 billion. YouTube ads revenue a beat, $10.26 billion, on estimate of $10.03 billion. Google ad revenue a beat, $74.18 billion, estimate $72.46 billion. Google Cloud revenue, $15.16 billion, a beat on estimate of $14.75 billion. Google Services revenue, $87.05 billion, on estimates of $84.67 billion. And Google Search and Other revenue, also a beat, $56.57 billion, on estimates of $54.99 billion. Beats across the board from Alphabet here in post-market trade. The shares are up around 3.7% now.
Down about $6 on Microsoft. ALGN, Align Technology, $2.61. The estimate was $2.40. That's a beat for ALGN. Shares of Microsoft continuing to pull back now, $522, down about $19. That is MSFT. Shares continuing to pull back now on Microsoft. Still falling here. META, Meta reporting. Meta reporting $1.05. The estimate on Meta was $6.62. That does not compare. Revenue of $51.24 billion. The estimate was $49.371 billion for Meta. Meta reporting 3.54 billion daily active users, daily active people. That's META Meta. Meta shares are selling off here now, down about $45, continuing to pull back here. META. Shares of eBay is reporting Echo Bravo Alpha Yankee. eBay reported $1.36 adjusted.
Large buy iceberg ESC 5 CME at 6,916.5
billion. The estimate was 2.72 billion, so that's a
large buy iceberg ESC 5 CME at 6,915.75.
Q4 revenue of $2.83 billion to $2.89 billion for Echo Bravo Alpha Yankee. Shares of eBay are Volatile here now, right now trading lower, down about $2 on eBay, EBAY. SBUX, Starbucks. Starbucks reported 52 cents. 57 cents was the estimate, so that's a miss. Revenue 9.57 billion is a beat on revenue. Miss on earnings for SBUX on the adjusted number. North America's same-store sales flat. Global same-store sales up 1% for Starbucks. Starbucks shares, though, are popping here now. 87.27 shares up more than $3 on Starbucks. SBUX. CVNA, Carvana. Carvana reported $1.03. The estimate on Carvana was $1.24 on the GAAP number. Revenue of $5.65 billion is above the $5.06 billion estimate, so that's a miss for Carvana on earnings, a beat on sales. Carvana sold 155,941 retail units in Q3. Carvana shares are pulling back here, 312.01, down about $40 right now on Carvana, CVNA. ROL, Rollins, reporting 35 cents. Romeo Oscar Lima. The estimate on Rollins was 33 cents. That's in line. Revenue $1 billion. The estimate was $1.02 billion. So that's pretty much in line report for Rollins, Romeo Oscar Lima. CHRW, CH Robinson. CH Robinson reported $1.40. The estimate was $1.30, so that's a beat for CHRW by 10 cents. Sales coming in short of estimate for CHRW, Charlie Hotel Romeo Whiskey. Shares of Microsoft off the lows now, 524, 525. Meta shares right now at $705, down about $46 following their report, META. BOOT, Boot Barn. Boot Barn reported $1.37. That's a 10-cent beat. That sales of 505 million. The estimate 494 million. That's a beat for Bravo Oscar Tango. Company raising its full year 2026 earnings guidance. That's BOOT, Boot Barn. CMG, Chipotle Mexican Grill, reported 29 cents. The estimate on CMG was 29 cents. That's in line. Revenue $3 billion. The estimate was $3.027 billion for Charlie Michael Golf. Chipotle shares a bit volatile here now, popping here, 41.40 the high, moving higher now on that report. That's Charlie Michael Golf, CMG. NLW, ServiceNow, invest in Z-Lab to boost CRM modernization. November Oscar Whiskey. MGM Resorts reporting 24 cents. The estimate on MGM was 40 cents, so that's short for MGM. Revenue 4.3 billion, the estimate 4.22 billion. So that's a miss on earnings for Michael Golf Michael. Amgen reported, waiting for those numbers. CHRW, CH Robinson announcing a share buyback, $2 billion. That's Charlie Hotel Romeo Whiskey. SVRA, Savra, announcing $75 million royalty funding agreement with RTW. MNMD, Mind Medicine, announcing a proposed public offering. PRU Prudential reporting. Prudential reported $4.26. The estimate on Prudential was $3.68, so that's a beat for Papa Romeo Uniform Prudential.
Large buy stop run in ESC5 meet 6928.58.
PBI, Pitney Bowes, increasing share buyback authorization to $500 million. Company reported their earnings. $0.31 adjusted for Papa Bravo India. The estimate was 32 cents, so that's a miss by a penny for PBI. MSFT, Microsoft, shares right now at about $525, down more than $16 on their report. Michael Sandy Foxtrot Tango. NTLA, FDA placed clinical hold on Intellia Therapeutics Phase 2 Next Z trials. That's NTLA, November Tango Lima Alpha. Shares pulled back on that news. Intellia hitting 1139 at the lows. Again, on that clinical hold by the FDA. That's NTLA. CLF Cleveland Cliffs filed for mixed shelf size not disclosed. That in a filing. Charlie Lima Foxtrot. Shares of Cleveland Cliffs pulling back on that offering announcement. That's Charlie Lima Foxtrot, 1327 now. Shares down about 85 cents on CLF. PPC, Pilgrim's Pride, reported $1.52. The estimate was $1.40 on the adjusted number, so that's a beat. Sales of $4.76 billion. The estimate was $4.699 billion, so that is a beat for Papa Charlie, PPC. VCIG, VCI Global SmartBridge appointed exclusive issuer and treasury manager for XVIQ tokens. Senator Schumer and other Democratic senators urged Trump not lift restrictions on AI chips and American tech in pursuit of China trade deal. MUSA, Murphy USA board approves a $2 billion share buyback. Micro Uniform Sandy Alpha. PED, Pedevco, to restate 2024 financials. After $5.5 million tax error, that's Papa Echo Delta. LWAI, Lifeway Foods, selling stockholders may offer from time to time up to 3.5 million shares of common stock. That's LWAY. Lima Whiskey Alpha Yankee. SBUX, Starbucks CEO, says that the company's China business has seen interest from multiple partners. That's SBUX, Starbucks. EHGO, as Halgo, files for mixed show for up to $100 million. That's Echo Hotel Golf Oscar, EHGO. WEX reporting, WEX. WEX reporting $2.30. The estimate on WEX was $2.56. That's on the gap number, so that's a miss. For WEX, MUSA, Murphy USA reported $6.76. The estimate was $7.07, so that's a miss for MUSA. QSI, Quantum Psi, may offer and sell Class A stock up to $100 million. That's Quebec Sandy, India, QSI. GPRK, Parex Resources submitted a proposal to acquire all the outstanding shares of GeoPark for $9 per share in cash. Currently at $7.77 off the highs, up $1.10, $1.20 now. That's GPRK. MAX Media Alpha, new $50 million share buyback program authorized by board. Michael Alpha X-ray. MORN, Morningstar, approved near 3-year, $1 billion share buyback effective October 31. That's MORN. Michael Oscar Romeo November. META, Meta, off the lows now, 696.25. Down about $55. That's Michael Echo Tango Alpha. Shares of Microsoft off the lows now, 525.88, down about $16 on Microsoft following their report, MSFT. CMG, Chipotle Mexican Grill shares continuing to pull back now during the company's earnings call, conference call right now at 36.26, down $3.50. That's Charlie Michael Golf.
According to CBS, US plans a show of force against China in the South China Sea. CBS cites 2 US officials familiar with the South China Sea plan. CBS reports it's unclear if the South China Sea operation will occur.
NVIDIA to announce the results on November 19th. Gap does not close. That's NVIDIA.
U.S. court pauses order for top border official in charge of Chicago immigration crackdown to appear daily before judge. Court filing. Dutch far-right leader Wilders, 25 seats would still be our second best result ever. Dutch far-right leader Wilders, we remain a large party in the Netherlands. Dutch far-right leader Wilders, still support decision to step out of previous government. Dutch far-right leader Wilders will likely not be in government if D66 is confirmed as election winner. Trump plans to appoint White House aide Ryan Barsha as FTC commissioner.
Hey, what do you want to watch tonight? It's your turn to pick.
All right. Hey, Google, find us a new hospital show. Something that's realistic, with a cool storyline, and good reviews.
Consider The Pit, a realistic, intense medical drama.
We've got some new faces with us today.
Wait, you think you can do that?
Yeah.
Welcome to The Pit. Let's go save some lives.
Hey, Google, what's an easy meal I can make with chicken breast under an hour that's healthy but not bland?
Try these flavorful and healthy chicken breast recipes.
If you're looking for lemon and herb
Hey, Google, we're moving to Houston in a couple of months. What neighborhoods would you recommend?
Consider Sugarland, The Woodlands, and Katy.
Hi, guys, and welcome to
And we're back. Now, Lando is a big car guy, and today we're going to be designing his next ride. But to do that, we're going to need some help from Gemini.
Okay, do I get to keep the car at the end?
Do we have the budget for that?
Let's circle back on that.
Anyway, we're going to pick a car and a base theme, and then we can do whatever we want.
Well, almost. True, I got one. Create an image of a McLaren 750S that looks like a shark zooming across the water.
Trump.
Right.
South Korea agrees to pay
What do you
USA
think?
$350 billion
Reminds me of
for
home,
lowering
actually.
tariffs.
And it's scary. If you were
Trump
behind me in this
agreed
car,
to
I'd get
purchase
out of the
our
way.
oil and gas in large quantities.
I reckon I got another one.
Investments from
Right.
affluent South
Okay.
Korean companies, businessmen will
Generate a
surpass
McLaren
$600 billion.
750S with a cow vibe, because we're going to Austin soon.
I think when you press the horn, it should move. Gemini, can you add a pink paint job to the front of the car?
But I reckon it can still be improved.
Okay.
Can you add horns to the bonnet?
That's more like it.
That's right. That's it right there. That's the vibe.
That's Austin.
I am driving that into Austin.
When you're trying to take a study break, but you can't get your finance class off your mind, you could just ask Google to dive deeper into any topic. So you're prepared for whatever the class throws at you. Wait, you didn't save me a slice? When Shakespeare starts to feel a bit complex and you've got questions upon questions, you can just ask Google to break it all down and even ask follow-ups so you can keep up with every twist, turn, and sibling rivalry. Spoiler alert, it doesn't end well.
We are continuing to make brushes that we made nearly 250 years ago.
Our farm has been in the family since 1938.
Our business is based on relearning old techniques.
When you're running your own business, the work never stops.
You've got to make decisions fast.
There's a lot of information that we need.
Office work, paperwork. Gemini's like an advisor.
It makes everything so much quicker.
It's really helped streamline the business.
I just think it's remarkable.
iPhone? Oh, hi, Pixel. Yeah. Is everything okay? Oh, sure. I'm just having trouble teaching my chickens to sing. Teaching your chickens to sing? Yeah, like you. Like me? You showed me that video where you taught your chickens to sing. Wait, this one?
Our eyes shine brighter than the morning dew.
Yeah, iPhone. What? I made that in Gemini. No way. Yeah, I can generate videos of just about anything. Wait, did you also use Gemini to make that video of turtles running an investment bank? Yeah, that was Gemini too.
Don't worry, we'll set up a shell company for it.
Oh no. Team meeting. Everyone in the conference room.
We lived in a very humble fashion, so we could try and expand our business. But it was a dream, and we kept working at it. And then the internet came along, and we decided that that was our game.
Google Ads changed everything.
Well, Google, the internet
internet search engine is one of the big success stories on the web.
The ads were relevant to what the user was looking for, and that turned into a fantastic business model.
It was a simple idea: serve the user, serve the customer, and build from there.
I kind of wonder what the hell we were doing 25 years ago.
For a small business, getting in front of customers is one of the biggest challenges.
We are like niche. Google advertising has helped us to find the right customer. At the end of the day, the best ads are just answers.
These types of tools level the playing field. There's no other way we could have done it. We sell more bikes, we're going to hire more people, bring more money into the community.
Google Ads doesn't just help businesses advertise. It helps millions of publishers and creators connect with those advertisements.
Ad revenue allows us to make apps accessible. 90% of our revenue comes from ads.
It always started with, I want to make things that other people would want to watch.
Welcome to my first video.
The thing about YouTube creators is they absolutely know how to tell stories to their audiences. They do it better than us.
The internet is an amazing place full of amazing content. Ads make it possible.
Any small business owner understands the sacrifices you make. Google keeps us ahead of the game with all things AI.
I'm trying to keep up with them, and that's what I love.
We're in the business of helping businesses. That's why I'm excited.
We are constantly reimagining what's possible, and it feels like we're just getting started.
Google has probably been one of the most integral parts of our business.
When you build a business like we have, it's just such a gratifying feeling. It's pretty special and pretty unique.
With NFL Sunday Ticket and YouTube TV, Jason Kelsey can watch every game every Sunday, all in one place. But how much NFL in one place can he handle?
Yes!
What have we done? NFL Sunday Ticket and YouTube TV. Every game, every Sunday, new users pay less.
If you buy a new phone because of a feature that's coming soon, but it's been coming soon for a full year, you could change your definition of soon, or you could just change your phone. When it comes to technology, there are few feelings as good as opening your brand new phone. Except, of course, opening your brand new phone and then opening your brand new phone.
Introducing Gemini Enterprise. Gemini Enterprise is an AI-powered conversational platform designed to bring the full power of Google AI to every employee for every workflow. It's built with Google's most advanced Gemini models. It enables you to chat with your company's documents, data, and applications. Gives you the tool to build and deploy AI agents, including a suite of pre-built agents, and is grounded in your company's information and your personal context at work. We think about Gemini Enterprise as the new front door for AI in the workplace. Bye, kids.
Hey, guys. I got some troubles, but they won't last. And pretty soon all my troubles will pass, 'cause I'm in Sugar Town. If I had $1 million or 10,
used to be a little less expected.
Check out the alliums. They'd go great with the hydrangeas below.
Will those last till Saturday?
Yeah, they should last until Saturday if they're kept in water and
Welcome, everyone. Thank you for standing by for the Alphabet third quarter 2025 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's third quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim. Good afternoon, everyone, and thanks for joining us. This was a terrific quarter for Alphabet, driven by double-digit growth across every major part of our business. We are seeing AI now driving real business results across the company. We delivered our first-ever $100 billion quarter. 5 years ago, our quarterly revenue was at $50 billion. Our revenue number has doubled since then, and we are firmly in the generative AI era. In parallel, we've built for the long term and diversified with successful businesses in cloud, YouTube, and subscriptions. Our momentum is strong, and we are shipping at speed. As just a few examples, our first-party models like Gemini now process 7 billion tokens per minute via direct API use by our customers. The Gemini app now has over 650 million monthly active users, and queries increased by 3x from Q2. Cloud had another great quarter of accelerating growth with AI revenue as a key driver. Cloud backlog grew 46% quarter over quarter to $155 billion. And we crossed 300 million paid subscriptions, led by growth in Google One and YouTube Premium. Today, I'll discuss progress in our full-stack approach to AI and then share highlights from Search, Cloud, YouTube, and Waymo. As a reminder, our full-stack approach spans AI infrastructure, world-class research, including models and tooling, and our products and platforms that bring AI to people everywhere. First up, AI infrastructure. Our extensive and reliable infrastructure, which powers all of Google's products, is the foundation of our stack and a key differentiator. We are scaling the most advanced chips in our data centers, including GPUs from our partner NVIDIA, as well as our own purpose-built TPUs. And we are the only company providing a wide range of both. As we announced yesterday at NVIDIA GTC, we are now shipping the new A4X Max instances powered by NVIDIA GB300 to our cloud customers. Our highly sought-after TPU portfolio is led by our 7th generation TPU Ironwood, which will be generally available soon. We are investing in TPU capacity to meet the tremendous demand we are seeing from customers and partners, and we are excited that Anthropic recently shared plans to access up to 1 million TPUs. Next, world-class AI research, including models and tooling. Our models are world-leading. Gemini 2.5 Pro, Veo, Genie 3, and our viral sensation Nano Banana are among the very best in class. Over 230 million videos have been generated with Veo 3, and more than 13 million developers have built with our generative models. We are looking forward to the release of Gemini 3 later this year. Our research leadership is advancing next frontier technologies. Last week, we announced that our Willow quantum chip achieved a major breakthrough, running an algorithm 13,000 times faster than one of the world's best supercomputers. And the result is verifiable, paving the way to future practical applications. Speaking of quantum, let me congratulate Michel Devray, our chief scientist for quantum hardware. He received a Nobel in physics for early research he did in the 1980s. 3 Nobels awarded to current Googlers in 2 years. Incredible. And third, our products and platforms. We are bringing AI to more people and developers than anyone else. In July, we announced that we processed 980 trillion monthly tokens across all our surfaces. We are now processing over 1.3 quadrillion monthly tokens, more than 20x growth in a year. Phenomenal. This quarter, we took big steps to reimagine Chrome as a browser powered by AI through deep integrations with Gemini and AI mode in search, with more agentic capabilities coming soon. In August, at Made by Google, we unveiled our Pixel 10 series of devices. They are the first with our most powerful chip designed to run on Gemini Tensor G5. They are our best reviewed devices ever. And last week, we launched Android XR, our new operating system with Samsung's Galaxy XR device. It brings new ways to use headsets and glasses with Gemini at the core. Now turning to highlights from search. AI is driving an expansionary moment for search. As people learn what they can do with our new AI experiences, they're increasingly coming back to search more. Search and its AI experiences are built to highlight the web, sending billions of clicks to sites every day. During the Q2 call, we shared that overall queries and commercial queries continued to grow year over year. This growth rate increased in Q3, largely driven by our AI investments in search, most notably AI overviews and AI mode. Let me dive into the momentum we are seeing. As we have shared before, AI overviews drive meaningful query growth. This effect was even stronger in Q3 as users continue to learn that Google can answer more of their questions. And it's particularly encouraging to see the effect was more pronounced with younger people. We're also seeing that AI mode is resonating well with users. In the US, we have seen strong and consistent week-over-week growth in usage since launch, and queries doubled over the quarter. Over the last quarter, we rolled out AI mode globally across 40 languages in record time. It now has over 75 million daily active users. And we shipped over 100 improvements to the product in Q3, an incredibly fast pace. Most importantly, AI mode is already driving incremental total query growth for search. Philip will talk more about monetization and share how AI is helping people connect with businesses and shop on search. Next, Google Cloud. Our complete enterprise AI product portfolio is accelerating growth in revenue, operating margins, and backlog. In Q3, customer demand strengthened in 3 ways. 1, we are signing new customers faster. The number of new GCP customers increased by nearly 34% year over year. 2, we are signing larger deals. We have signed more deals over $1 billion through Q3 this year than we did in the previous 2 years combined. Third, we are deepening our relationships. Over 70% of existing Google Cloud customers use our AI products, including Banco BV, Best Buy, and Fair Price Group. As we scale, we are diversifying revenue. Today, 13 product lines are each at an annual run rate over $1 billion. And we are improving operating margin with highly differentiated products built with our own technology. This deep product differentiation starts with our AI infrastructure. We have a decade of experience building AI accelerators and today offer the widest array of chips. This leadership is winning customers like HCA Healthcare, LG AI Research, and Macquarie Bank. And it's why 9 of the top 10 AI labs choose Google Cloud. We are also the only cloud provider offering our own leading generative AI models, including Gemini, Imagine, Veo, Chirp, and Lyria. Adoption is rapidly accelerating. In Q3, revenue from products built on our generative AI models grew more than 200% year over year. Over the past 12 months, nearly 150 Google Cloud customers each processed approximately 1 trillion tokens with our models for a wide range of applications. For example, WPP is creating campaigns with up to 70% efficiency gains. Swarovski has increased email open rates by 17% and accelerated campaign localization by 10 times. Earlier this month, we launched Gemini Enterprise, the new front door for AI in the workplace, and we are seeing strong adoption for agents built on this platform. Our packaged enterprise agents in Gemini Enterprise are optimized for a variety of domains, are highly differentiated, and offer significant out-of-box value to customers. We have already crossed 2 million subscribers across 700 companies. Next, YouTube. In the living room, YouTube has remained #1 in streaming watch time in the US for more than 2 years, according to Nielsen. Last month marked YouTube's first time as a live NFL broadcaster. This exclusive global broadcast, live from Brazil, drew more than 19 million fans and set a new record for most concurrent viewers of a live stream on YouTube. YouTube Shorts also continues to perform well. In the US, Shorts now earn more revenue per watch hour than traditional in-stream on YouTube. At our Made on YouTube event, we rolled out a number of AI-powered features that are helping creators supercharge creation and build their businesses. AI is now streamlining the entire content creation workflow, from generative video tools and more efficient editing to AI-powered insights that help creators optimize their channels. We are also using AI to expand monetization, automatically identifying products to make their videos more shoppable. Philip will discuss in more detail. And finally, Waymo. Next year, Waymo aims to open service in London, and they are working to bring service to Tokyo. They've also announced expansions to Dallas, Nashville, Denver, and Seattle, and secured permission to operate fully autonomously at San Jose and San Francisco airports. Autonomous testing continues to scale in New York City. The new Waymo for Business allows enterprises to offer Waymo as a work travel option. And we launched Waymo Teens accounts in Phoenix this summer. We are pleased to see usage steadily increase with positive feedback from teens and their parents alike. Waymo's growth and momentum are strong, and 2026 is shaping up to be an exciting year. Overall, a milestone quarter. The incredible work of our teams is driving momentum across the board, and our leadership in AI positions us so well for the opportunity ahead. I want to thank all of our partners and our employees for their hard work and an excellent Q3. With that, I'll turn it over to Philip.
Thanks, Sundar, and hello, everyone.
I'll quickly cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google services revenues were $87 billion for the quarter, up 14% year-on-year, driven by accelerated growth in search and YouTube, partially offset by year-on-year decline in network revenues. Adding some further color to our results. The 15% increase in search and other was led by growth across all major verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across verticals. Its 15% growth in advertising revenues was driven by direct response, followed by brand. Starting with search and other revenues, which delivered over $56 billion in revenue for the quarter. As Sundar mentioned, AI is driving an expansionary moment and transforming how people use Google Search. Our investments in new AI experiences, such as AI overviews and AI mode, continue to drive growth in overall queries, including commercial queries, creating more opportunities for monetization. These AI experiences are enhancing how people connect with businesses and shop on search. We recently added shopping capabilities in AI mode, which now help people shop conversationally in search, and we expanded try-on capabilities to more clothing items, now available to anyone in the US. Lastly, we're making it easier for consumers to benefit from deals through new loyalty offerings like personalized annotations on organic results and ads. Looking at monetization, businesses can now tap into our most powerful AI search experiences. Using our most advanced AI models, we can understand and predict intent like never before, unlocking entirely new commercial pathways to provide valuable new consumer connections and helping us monetize even more efficiently. Rolled out globally in September, AI Max in search is already used by hundreds of thousands of advertisers, currently making it the fastest growing AI-powered search ads product. In Q3 alone, AI Max unlocked billions of net new queries. By delivering the most relevant ad across surfaces and matching advertisers against additional queries they weren't reaching before, AI Max helps advertisers discover new customers at the exact moment they need their product or service. Kayak, for example, looked to grow conversions while staying within their ROAS goals. After turning on AI Max in search, they grew the conversion value by 12% in early tests. We continue to infuse generative AI capabilities at every step of the marketing process. We rolled out Imagen 4 in Asset Studio and Product Studio, helping businesses produce more and better creatives. On the measurement front, we enriched the model supporting Meridian, our marketing mix model, with additional variables. And more granular reporting in PMax is making bidding more effective. Financial services company SoFi has been using PMax to meet its ambitious growth targets and help drive a 39% improvement in its conversion volume year over year. Moving to YouTube, where we saw accelerated revenue growth, our recommendation systems are driving robust watch time growth in our key monetization areas like Shorts and Living Room. As we leverage Gemini models, we're seeing further discovery improvement. On direct response, we're excited about the growth in revenue we're seeing, especially from small and medium advertisers adopting Demand Gen. We also improved performance on Demand Gen, with over 100 launches helping to increase conversion value by more than 40% for advertisers using target-based bidding on YouTube. The retail vertical continues to lead our growth on YouTube, with Demand Gen helping us further monetize shopping-related categories. Looking at the living room, our long-term bet, more advertisers are adopting interactive direct response ads, leading to an annual revenue run rate exceeding $1 billion globally for this format. For our viewers, we continue to give fans greater access across sports while tapping into the best of YouTube's product innovation and creator-led content. Sundar mentioned that we expanded our NFL partnership with our first ever exclusive global broadcast of an NFL game. Brands loved the opportunity, and we sold all our ad inventory within a couple of weeks. Looking at creators, a significant force behind the thriving YouTube creator economy is the collaboration between creators and brands. Tools like direct linking to deals, websites, and Shorts and swappable brand segments in long form will soon help creators show how they deliver great value for brands. Thanks to a collaboration with Dude Perfect, Comcast Xfinity drove an 8% search lift, beating other Xfinity ads' recall lift on Shorts by 34%. At the same time, it decreased the cost per lifted user by 50% when compared to the next most efficient ad. We continue to invest in AI-powered features that are helping creators supercharge creation and build their businesses. With VO3 integration and speech-to-song, creators go from idea to iteration quicker, and new channel insights help them better understand performance. Ending on YouTube with our subscriptions products, we're also seeing momentum with strong growth in offerings such as YouTube Music and Premium and YouTube TV. We're also applying Gemini internally to help us serve customers with increased speed, intelligence, and efficiency. Our sales teams use Gemini enriched with ads knowledge to streamline customer interactions. This increased productivity by over 10%, led to hundreds of millions in incremental revenue, and frees up sellers to engage with more customers at a deeper, more strategic level. In our customer support division, Gemini-powered solutions have managed over 40 million customer sessions so far this year and resolved hundreds of thousands of customer inquiries, and we're just getting started. As always, I'll wrap with the progress we're seeing across partnerships where customers tap into the strength and breadth of Google's products to accelerate their transformation. Revolut, the global financial services company, leverages Google Cloud's Vertex AI platform and Gemini models to help power its advanced customer service chatbot, develop new hyper-personalized financial products, and offer predictive insights. Revolut is also increasing its presence on YouTube, adopting VO3 for personalized creatives, making Google a key ads partner for delivering growth and launching new markets. In closing, I'd like to thank Googlers everywhere for their contributions to our success, and as always, to our customers and partners for their continued trust. And, of course, a huge thanks to all of you as we celebrate 25 years of Google Ads. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the third quarter, unless I state otherwise. I will start with results at the Alphabet level and will then cover our segment results. I'll end with some commentary on our outlook for the fourth quarter of 2025. We had an outstanding quarter in Q3, continuing the strong momentum we've had throughout the year, delivering double-digit revenue growth across search and YouTube advertising, subscriptions, platforms and devices, and Google Cloud. Consolidated revenue reached $102.3 billion, a 16% year-over-year increase, or 15% in constant currency. Total cost of revenue was $41.4 billion, up 13%. Tech was $14.9 billion, up 8%. Other cost of revenues was $26.5 billion, up 16%, with the increase primarily driven by content acquisition cost, largely for YouTube, followed by depreciation and other technical infrastructure operations costs. Total operating expenses increased 28% to $29.7 billion. R&D expenses increased by 22%, driven by compensation and depreciation expenses related to our AI efforts. Sales and marketing expenses were flat, and G&A expenses increased meaningfully, primarily due to the $3.5 billion charge related to the European Commission fine mentioned in the earnings press release. Operating income increased 9% this quarter to $31.2 billion, and operating margin was 30.5%. Excluding the EC fine, operating income increased 22%, and operating margin was 33.9%. Operating margin benefited from strong revenue growth and continued efficiencies in our expense base, offset by the legal charge and a significant increase in depreciation expense. Other income and expenses was $12.8 billion, primarily due to unrealized gains in our non-marketable equity securities portfolio. Net income increased 33% to $35 billion, and earnings per share increased 35% to $2.87. We generate free cash flow of $24.5 billion in the third quarter and $73.6 billion for the trailing 12 months. Free cash flow in Q3 benefited from strong operating cash flow and recent tax changes regarding the timing of when research and development costs are expensed and assets are depreciated. This was partially offset by higher CapEx. We ended the quarter with $98.5 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 14% to $87.1 billion, reflecting strength in Google Search, YouTube advertising, and subscriptions. Google Search and other advertising revenues increased by 15% to $56.6 billion, representing another robust quarter with continued growth across all major verticals, with the largest contributions from retail and financial services. YouTube advertising revenues increased 15% to $10.3 billion, driven by direct response advertising, followed by brand. Network advertising revenues of $7.4 billion were down 3%. Subscriptions, platforms, and devices revenues increased 21% this quarter to $12.9 billion, driven by very strong growth in both YouTube and Google One subscriptions. Google Services operating income increased 9% to $33.5 billion. Operating margin declined year-over-year to 38.5%, as healthy revenue growth and continued efficiencies in our expense base were offset by the impact of the EC fine, which was fully reflected in the Google Services segment. Turning to the Google Cloud segment, which again delivered very strong results this quarter, as Cloud continued to benefit from our enterprise AI-optimized stack, including our own custom TPUs and our industry-leading AI models. Cloud revenue increased by 34% to $15.2 billion in the third quarter, driven by strong performance in GCP, which continued to grow at a rate that was much higher than Cloud's overall revenue growth rate. GCP's growth was driven by enterprise AI products, which are generating billions in quarterly revenue. We had strong growth in enterprise AI infrastructure and enterprise AI solutions, which benefited from demand for our industry-leading models, including Gemini 2.5. Core GCP was also a meaningful contributor to growth. And we had double-digit growth in Workspace, which was driven by an increase in average revenues per seat and the number of seats. Cloud operating income increased by 85% to $3.6 billion, and operating margin increased from 17.1% in the third quarter last year to 23.7% this quarter. The expansion in Cloud operating margin was driven by strong revenue performance and continued efficiencies in our expense base, partially offset by higher technical infrastructure usage cost, which includes depreciation expense and other operations costs such as energy. Google Cloud's backlog increased 46% sequentially and 82% year-over-year, reaching $155 billion at the end of the third quarter. The increase was driven primarily by strong demand for enterprise AI. As Sundar mentioned earlier, Cloud has signed more billion-dollar deals in the first 9 months of 2025 than in the past 2 years combined. In other bets, revenues were $344 million, and operating loss was $1.4 billion in the third quarter. Within other bets, we continue to allocate more resources to businesses like Waymo, where we see opportunities to create substantial value. With respect to CapEx, in the third quarter, our CapEx was $24 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately 60% of that investment in servers and 40% in data centers and networking equipment. In Q3, we returned capital to shareholders through repurchases of stock of $11.5 billion and dividend payments of $2.5 billion. Turning to our outlook, I would like to provide some commentary on factors that will impact our business performance in the fourth quarter of 2025, as well as an updated outlook for CapEx for the year. First, in terms of revenues, we're pleased with the overall momentum of our business. At the current spot rates, we could see an FX tailwind to our revenues in Q4. However, the volatility in exchange rates could affect the impact of FX on Q4 revenues. As for our segments, in Google Services, year-over-year comparisons in advertising will be negatively impacted by the strong spend on U.S. elections in the fourth quarter of 2024, particularly on YouTube. In Cloud, demand for our products remains high, as evidenced by the accelerating revenue growth and the $49 billion sequential increase in Cloud backlog in Q3. In GCP, we see strong demand for enterprise AI infrastructure, including TPUs and GPUs, enterprise AI solutions driven by demand for Gemini 2.5 and our other AI models, and core GCP infrastructure and other services, such as cybersecurity and data analytics. As I've mentioned on previous earnings calls, while we have been working hard to increase capacity and have improved the pace of server deployments and data center construction, we still expect to remain in a tight demand-supply environment in Q4 and 2026. Moving to investments, we're continuing to invest aggressively due to the demand we're experiencing from cloud customers, as well as the growth opportunities we see across the company. We now expect CapEx to be in the range of $91 billion to $93 billion in 2025, up from our previous estimate of $85 billion. Keeping in mind that the timing of cash payments can cause variability in the reported CapEx number. Looking out to 2026, we expect a significant increase in CapEx, and we'll provide more detail on our fourth quarter earnings call. In terms of expenses, first, as I've mentioned on previous earnings calls, the significant increase in our investments in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expenses and related data center operations costs, such as energy. In the third quarter, depreciation increased $1.6 billion year over year to $5.6 billion, reflecting a growth rate of 41%. Given the overall increase in CapEx investments, we expect the growth rate in depreciation to accelerate slightly in Q4. Second, we expect sales and marketing expenses to be more heavily weighted to the end of the year, in part to support product launches and the holiday season. Q3 was a strong quarter, and we're excited with the adoption of our AI products, helped by a rapid pace of innovation and great execution by our teams. This translated into strong momentum in search, YouTube ads, subscription platforms and devices, and cloud, resulting in our first $100 billion plus quarter. Now, Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Great. Thanks for taking my questions, everyone. The first one, maybe for Philip or Sundar, it's on agentic e-commerce and agentic travel. There's a lot of external Wall Street discussion about agentic e-commerce potentially monetizing at a lower rate than search. So the question is, what factors are you most focused on to sort of ensure a smooth transition for your search business and for your advertisers as you move over to a more agentic world? And the second one, Sundar, is on Waymo. How far are we from an integration of Waymo into more of the core Gemini capabilities and the users in the platform? You're taking your user data of where I'm going, what hotel I'm staying at, what airport I'm staying at, and have me integrate that into Waymo so you can actually have users use their profiles to pre-schedule Waymos. How far off is that? What do we have to do?
Look, Brian, great question. This is all early, but we see agentic experiences really as additive to the way people seek information. It helps us answer people's tough questions. It helps people get stuff done, and it helps businesses in the process. And we're working on multiple agentic experiences across key verticals such as travel, commerce, shopping, and so on. And we're paying a lot of attention to creating a seamless user experience, but also to the fact that we need to integrate different partner ecosystems in a way that it creates value for them. And by the way, we're also working closely with a lot of our partners on the other side through our cloud services to improve their own agentic experiences. And so maybe we go a little deeper on the shopping side, where we actually use AI already very actively to improve the shopping experience. As you know, we launched a more visual experience on AI mode that gives people a much more intuitive conversational way to shop. You can simply describe what you're looking for now, like the way you would talk to a friend, and we'll show you the visual shopping results. And then we think about building an agentic shopping future, and it has to be one, again, that benefits both users and merchants here. And you know that at AIO, we also introduced new agentic checkout, which will let shoppers use like agentic AI to buy products from merchant sites and so on. We have a partnership with PayPal to help merchants build agentic commerce experiences. We have a new open protocols for agent-to-agent transactions, and so on and so on.
And Brian, on Waymo, great question. I was reflecting, I think, on the exact same topic I'm scheduled to meet with the team to do a review on it in a few weeks out. Look, it is an exciting time. Waymo clearly, is scaling up, particularly in 2026. And I think the possibility, as you said, of Gemini, particularly with the multimodal experience, as well as services like YouTube, I think there's a real opportunity to make the in-car experience dramatically better. Definitely something we are excited about, and you'll see newer experiences in 2026 for sure.
Great. Thank you both.
Our next question comes from Doug Anmuth with J.P. Morgan. Your line is now open.
Thanks for taking the questions. Philip, maybe you can just talk more about some of the drivers of the core search strength. And I guess in particular, when you think about AI overviews and AI mode, we know that query growth is accelerating, but can you help us understand from there kind of what happens in terms of clicks per query and conversion rates and pricing in these AI-driven search formats? And then, Anat, can you talk about where you see opportunities in the core cost base as you look to make room to absorb the rapid growth in infrastructure and depreciation going forward? Thanks.
So let me give you a bit of vertical color first. In Q3, search and other revenues, again, delivered growth across all major verticals, as we said. It was from retail and financial services. Healthcare was also a contributor to the growth here. Our new AI experiences, you mentioned them, AI overviews, AI mode, continue to drive growth in overall queries, including commercial queries, really creating more opportunities for monetization. AI overviews are scaling up and are working for our entire user base. We're now scaled to over 2 billion users here, and we're continuing to expand ads in AI overviews in English to more countries across desktop, mobile, and so on. And as I've shared before, for AI overviews, even at our current baseline of ads, below and within the AI's response, overall, we see the monetization at approximately the same rate. So over time, we're excited about the opportunity of richer experiences in AI mode and AI overviews to basically open up then the opportunity for also much richer placements. I think, as I've said on a prior call, we managed a business to drive great outcomes for our users and an attractive ROI for our advertisers. We don't really manage to paid clicks and CPC targets. But as you will see in the 10Q, paid clicks were up 7% year on year, and CPCs were up 7% year on year.
Doug, into your question around where else can we see more opportunity for efficiency and productivity, and I think you heard me say before, this is not a one-time type of effort, but rather an ongoing way in which we manage the business. And the key here is that the more we drive productivity across our business, the more we can invest in the business for growth and obviously continue to drive improvement in the P&L. Some of the areas are things that you've heard us talk about in the past, such as moderating the pace of headcount growth, optimizing our real estate footprint, but also as we invest more and more in our technical infrastructure, ensuring that we are optimizing that build out and the overall technical infrastructure we have. You know that a lot of the data centers, for example, that we build ourselves, so they're optimized and we make sure we do them in the most efficient way. Sundar mentioned on one of the previous calls the productivity associated with leveraging AI for Google. So there's the example, the percent of code, now nearly half of all code generated by AI. That's a way for us to leverage AI to drive further productivity across the business. And obviously, we always look at making sure that when we provide services or products, that we get the right economics and the right value for what we provide. So one good example is Shorts, which has a lower revenue share than InStream, that it helps to improve some of our gross margins. So this is an effort we have ongoing. I've mentioned in the past that we have a headwind with depreciation, obviously increasing alongside our CapEx increase. So we have efforts across the organization to ensure we run the business in the most disciplined and productive way while continuing to invest for future growth.
Thank you both.
Our next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the questions. Maybe two, if I could. Sundar, when you think about your custom silicon efforts across the organization, can you reflect a little bit about the opportunity set you see with each passing generation of custom silicon, both in terms of driving operating efficiencies inside the organization and potentially increased monetization efforts around those outside of the organization? Second question would be for Philip. Obviously, we can see the YouTube advertising revenue number in the reported results. Can you reflect a little bit about the scaling of the subscription side of YouTube offerings and how the two parts in together maybe represent an interesting framework in thinking about the monetization side of YouTube increasingly being a mix of both ads and subscription? Thank you.
Eric, overall, I would say we are seeing substantial demand for our AI infrastructure products, including TPU-based and GPU-based solutions. It is one of the key drivers of our growth over the past year, and I think on a going forward basis, I think we continue to see very strong demand, and we are investing to meet that. I do think a big part of what differentiates Google Cloud, effectively, we've taken a deep full stack approach to AI. So we are, and that really plays out, right? We are the only hyperscaler who's really building offerings on our own models. And we are also highly differentiated on our own technology. So to your question, I think that does, give us the opportunity to continue driving growth in operating margins in cloud as we have done in the past. And also, I think from a revenue, sets the infrastructure portion of our business to be a growth driver looking ahead as well.
And to the second part of your question, look, just taking a quick step back, we often describe YouTube's business as a flywheel. Obviously, it first all starts with the creators, and we have significantly invested here to be the place that YouTube creators really call their home. That's a big piece of it, the number one piece. Viewers, of course, YouTube has billions of monthly logged-in users, and every day people watch billions of hours of video. And we talked about how our recommendation systems are driving robust watch time growth, and so on and so on. So on the monetization side, YouTube's business is really powered, I would say, on let's call it a twin engine monetization strategy, combining its advertising business and its growing subscription services. Both YouTube ads and subscriptions saw strong growth this quarter. And so looking at YouTube Music and Premium, users are on average delivering more value to creators, to music media partners, and YouTube itself than even ad-supported users do. So in other words, on average, a YouTube Music and Premium subscriber generates a meaningful higher gross profit than they were simply an ad-supported users. And fans come from all over the world, this, and this engagement through ads and subscription generates YouTube's revenues and funds what I started with, these creators here. And this then drives more viewership and engagement and so on. And that's the flywheel. And so our priority continues like this growth cycle. We're happy with this twin engine monetization strategy.
Our next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the questions. Sundar, with the strong adoption of Gemini, AI mode, and overviews across the user base, are there any meaningful differences to call out kind of around the behavior and depth of engagement for those users across the entire Google ecosystem? And then, Philip, I know we kind of asked this, most quarters, but I'm curious kind of with some of the adoption you've seen around AI overviews and mode, how you see the economics of search evolving with the higher commercial and total query volume, and how it kind of compares against the incremental cost to deliver these results. Thank you.
Mark, look, I think obviously AI overviews are a natural part of the Google experience, and so engagement is very, very high. I would say AI mode, you have a varied cohorts. There are people who are casual users who are checking it out, but there's a core group which really likes AI mode and is passionate about it, and so you see the early adopters. The product is resonating very strongly, and they're seeking it out. So I think that's how I would highlight the difference. With Gemini, again, set of engaged user base who are seeking out the product and so on. But across the board, I think the trajectory has been. We are definitely seeing in each of those use cases a set of early adopters, and then more people coming in, and the people who are using it continue to use it more over time and report high user satisfaction. So I would say the underlying product metrics are pretty encouraging to see as well.
Look into the second part of your question. I think we covered before, Sundar covered the query development. And as I've just said before, for the AI overviews, even at our current baseline of ads, right, whether above, below, and within the AI response, overall, we see the monetization at approximately the same rate. And this is a great baseline for further innovation. We talked about this. We're excited about where this can go. And on the AI mode side, we're testing ads in AI mode, and we'll continue to test and learn before we expand this any further. So this in combination with what we mentioned about the commercial query overall development, I think we're in a good place here. You could also argue that on queries that historically have not been well monetized, we think there's a potential opportunity here where you can obviously imagine that we can build this out with smart AI integration.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have two, one for Philip, one for Anat. Philip, it's clear that when people use AI mode, the query length is much longer. Could you talk about how that longer length may be impacting your ability to drive ROAS and what you're seeing in terms of the benefits of maybe longer query length? And then, Anat, you came to Alphabet from a pharmaceutical company. You've been there more than a year. Can you talk a bit about how you're working to look at ROIC internally, and what early signs are you seeing that gives you confidence that this spending is really driving better returns longer term? Thanks.
Look, as Sundar shared, AI mode now has over 75 million daily active users in the US, and we see strong and consistent week-over-week growth in usage since launch, and the queries doubled over the quarter. And as I also mentioned, we're testing ads in AI mode. We'll continue to test before we expand any further. It's really too early to tell and go into any of the details of that testing.
Okay.
Yes, and the question related to ROIC and how we look at just overall our business and where do we see early signs that are encouraging. So first, I would say it's not just early signs because we're seeing returns, obviously, in the cloud business. You've heard us talk about the fact that we already are generating billions of dollars from AI in the quarter. But then across the board, we have a rigorous framework and approach by which we evaluate these long-term investments that are meant to do two things. One is to ensure we build a resilient growth profile for the company, but also that we meet the demand of the customers that we have here in the more near and midterm. So we look at it across the business. We evaluate the potential return for each one of them, whether it's in cloud, and I think that's more visible, obviously, externally, given that you see the revenue generated and the fact that we're unable to meet at this point customer demand. We have more demand than we have supplied. In our ads business, you see the fact that we're investing to transform search, as you heard from Philip and Sundar with AIO and AI mode. So we're excited to see what our investments are, how the investors are helping advertisers as well. YouTube, where it's helping power recommendations. So when we make a decision on investment in the long term, we go through a very rigorous process of assessing what the return could be and over what time frame we will see that return to give us the high level of confidence to then invest and make those investments for the long term. So it's a very rigorous approach.
Thanks.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. About 20% of Google's search queries are commercial historically, and you've talked a bunch on this call about how AI overviews are kind of expanding the breadth of queries. Could you talk about how new products on the monetization side, like AI Max, are potentially increasing the percent of commercial queries?
So Look, AI Max, and I mentioned this in my call before, improves the ability for advertisers to target a wider range of queries. Separately, there is the question of whether queries actually increase with AI mode, and Sundar actually talked about it and mentioned the opportunity that he sees here. So I think it's important to separate those two things. And I personally also see, this is what I just said in my last remark, that I think over time there's an opportunity to actually take, let's say, queries that are not fully commercial, but could have an adjacent commercial relationship to basically expand this into more attractive ads offerings without, while really creating a really interesting user experience at the same time.
Yeah, and the only thing I would add is just stepping back broadly, I think AI overviews and AI mode are, dramatically improving search. We can see it in user satisfaction, user quality, all our metrics. And they're universal in the nature. They apply across the universality of human needs. So I think we are seeing it in breadth. And so, naturally over time, that'll apply to commercial categories as well.
Our next question comes from Ken Gorowski with Wells Fargo. Your line is now open.
Thank you very much. Two questions, please. First, it appears more and more clear that all the new modes, whether at Google with Gemini overview, AI overviews, AI mode, even ChatGPT, is growing the addressable market for engagement in search-like behavior. Could you talk about what gives you confidence that it will also grow the addressable market for marketing activity and overall revenue associated with that behavior? That's question one. And question two is just more about, as you think about AI mode, AI overviews, and traditional Google search, how do you think, do you see a world in 12 to 24 months, those all coexist? And does the user eventually pick what mode they want? Does the algorithm pick the mode? Can you talk a little bit about how you think that will progress over the next 12 to 24 months? Thank you very much.
Ken, thanks. Look, I think, it's a dynamic moment, and, I think we are meeting people in the moment with what they are trying to do. Obviously, search is evolving, and, between AI overviews and AI mode, I think we are able to kind of give that range of experience for people in this moment. Over time, you can expect us to make the experiences simpler in a way that, just like we did universal search many years ago, we may have done text search, image search, video search, etc., and then we kind of brought it together as universal search. So you will see evolutions like that, but I think we want to be sensitive to making sure we are meeting the users, in terms of what they are looking for. I think Gemini allows us to build a more personal, proactive, powerful AI assistant for that moment, and I think having the two surfaces, Search and Gemini, allows us to really serve users across the breadth of their needs. But over time, we will, thoughtfully look for opportunities to make the experience better for users. And to the first part, I would broadly say, I do think we've been consistently saying for a while now, this is an expansionary moment, and we are seeing people engage more. And I think when they do that, naturally a portion of that information for users, those journeys are commercial in nature. So I would expect that to play out over time as well.
Our last question comes from Justin Post with BAML. Your line is now open.
Great. Just a couple. Sundar, I think you mentioned Gemini 3 is coming. Maybe you comment on the pace of innovation in frontier models. Is there still just a tremendous amount of innovation, or is it slowing at all? And then you mentioned, a number of large deals signed in the last 9 months for cloud, which is great. Any changes in the economics of these deals as far as long-term profitability? Anything we should be aware of? Thank you.
Thanks, Justin. The first on the pace of frontier model research and development. Look, I think two things are both simultaneously true. I'm incredibly impressed by the pace at which the teams are executing and the pace at which we are improving these models. But it also is true at the same time that each of the prior model you're trying to get better over is now getting more and more capable. So I think both the pace is increasing, but sometimes we are taking the time to put out a notably improved model. So I think that may take slightly longer, but I do think the underlying pace is phenomenal to see, and I'm excited about our Gemini 3.0 release later this year. On cloud, I would point out as a sign of the momentum, I think the number of deals greater than $1 billion that we signed, in the first 3 quarters of this year are greater than the 2 years prior. So we are definitely seeing strong momentum, and we are executing at pace. And in terms of long-term economics, I would say that, again, us being a full stack AI player, and the fact that we are developing highly differentiated products on our own technology, I think will help us, drive a good trajectory here, as you have seen over the past few years.
Great, thank you.
Thank you, and that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter 2025 call. Thank you and have a good evening.
Folks, Mayhem here. I want to thank you for tuning in to the Google earnings. I think this was, of the big tech earnings, the best earnings that we saw. And management is palpably optimistic. And remember, Google is a company that actually has AI in their DNA. They invented the current transformer LLM models that we use now, that are what powers things like ChatGPT and Anthropic and otherwise, back in 2017, before any of these companies even started aggressively investing in AI. Google was there. That's one of the reasons I put out the call to buy Google on a breakout back in June 8th of this year. Shares are up 70% from there. And I think this is part of a longer-term outcome for Google, who is now kind of unchained. They're no longer under the scrutiny of the DOJ. They can really start to release a lot of this pent-up growth. And Google's also a big player in semiconductors. They've got their TPUs. They are competitive. We see companies like OpenAI and other players in the AI space investing in Google TPU technology. It also helps to power Google's own AI endeavors. So one of the things that Sundar said was, they're building these full stack products and services with their own technology. That is a big deal. There's not a lot of companies in tech that do that. Amazon, Microsoft, and Google are leaders in that space. NVIDIA has become much more formidable in that space as well. But I would say that in all, when you look outside the tech landscape, there's a lot of interdependency, whereas Google has created a much more diversified stack that's going to allow them to build outside of their core, which is advertising, through things like search and video. And that's what makes me kind of excited about the future of this company moving forward. So I think Google is one of those companies you just have to have in your forever portfolio, keep adding on weakness, and believe that it's going to be one of the players that stays in the top 5 of technology for the foreseeable future. If you want to learn more about me and my work, visit Traderade.com or follow me at Mayhem4Markets on X and YouTube. And I'll be back for the next big earnings, so stay tuned, everyone. Have a great night.